Is or has your spouse prepared for a divorce? Is your spouse understating their earnings? Do you think your spouse is hiding assets? If you are worried that you will not get your fair share of what you are owed in your divorce, this video is a must-watch for you. My name is David Malamed, and I am a forensic accountant and fraud investigation expert. In this video, I'm going to demonstrate how assets are hidden. I'm going to identify red flags indicating financial fraud for divorce, and I'm going to show you how you may be entitled to more money from your estate than your spouse. What you learn in this video, you will be able to use right away. So let's go. Divorce can be an emotional release of anger, betrayal, and mistrust. These types of feelings are expected, specifically if one partner had an affair or if the separation announcement of the divorce was a surprise for you. Those feelings, and at times rightfully so, can create significant mistrust of your spouse, which may lead you to think that your spouse is hiding assets or involved in other financial misconduct. I do want to warn you that serious fraud is not usually committed in the majority of divorces. But if you have been living a lavish lifestyle, noticed your spouse, at least in the past, buying you fancy jewelry, and you were going on fancy vacations, and then things changed either abruptly over time, where your spouse started to explain to you that there just is no more money, and that statement just doesn't make sense to you, you may have a problem. Alternatively, if your spouse is a salaried employee and you've lived a normal life for the last 10 years you were married, it's doubtful that there is a hidden offshore account filled with money just waiting to be found. Coming up, I'm going to be speaking to you about the red flags you need to know regarding a planned divorce and how you may be entitled to receive more money than your spouse regarding the division of assets. Hidden or missing assets and misrepresentation of family income are two common areas of money manipulation that, if left undiscovered, can lead to a disproportionate share of the assets going to one spouse. During the stages of divorce, our forensic accounting and fraud investigation team have deep experience working with clients to identify hidden or undervalued assets. As part of our process, we follow the paper trail, nowadays the electronic trail of funds through the various accounts of the marriage, determine the actual income of the family, verify claims of commingling marital and separate assets, and help substantiate the validity of a potential claim for dissipation of marital assets. To learn more about me and the services we offer, please visit uncoverfraud.com. If you found this video helpful so far, please like it below. Also subscribe to my YouTube channel, as there are more videos on divorce that will be helpful to you. Now let's talk about how and why financial fraud could occur in a planned divorce. A divorcing spouse may convince an otherwise honest relative or friend, a brother, a sister, a mother, a cousin, a best friend, to help with covering up marital assets by telling them that their ex is accumulating debt and emptying bank accounts. What they'd ask those individuals to do is either to buy an asset from them that's undervalued, they want to just transfer assets for them to hold. What would you do if a cousin asked you to do them a favor? The next question to answer is, what is your forensic accountant and fraud investigation expert going to do to help? It is standard procedure to review general records, including tax returns, bank statements, credit card statements, retirement accounts, and so on. In fact, the more money a divorcing person has, the more places it can be hidden away and out of sight. Employees of companies may have deferred compensation plans, stock options, bonuses, or other fringe benefits that they forget to declare. Business owners have plenty opportunities to hide both income and assets from the lawyers and the spouse's eyes. That is, unless someone like your forensic accountant and fraud investigation expert possesses the financial skill set to review the information and then make a professional judgment about the veracity of the financial information. For families that have sizable net worth, hiding places can become numerous and creative. And to tell you the truth, there may be some intention in making the trail more complicated. Shell corporations, unfunded trusts, life insurance vehicles, hidden safety deposit boxes. Those are just a few of the favorite hiding places that can be uncovered using a skilled forensic accountant and fraud investigator. Deception varies depending on the perceived opportunity and motive, but the objective is to defraud the other spouse of their entitlement. For those of you who are or were uncertain about your spouse's intentions, the following red flags will either illuminate concern or explain your spouse's out-of-ordinary behavior. And here are the red flags for financial fraud and planning for divorce that you need to be on the lookout for. First of all, evaluate changes in secret behavior, lifestyle, and income. They're all clues that one spouse may be in the process of committing financial fraud involving your divorce. The most difficult element to prove in fraud cases is fraudulent intent. But there is something earth-shattering that occurs when evidence is identified that cannot be ignored any longer and it's presented. So let's discuss some of the common red flags. There's been a change in the level of confidentiality between spouses. One of the spouses has suddenly become more secretive. Some mail that used to arrive to your home suddenly seems to be rerouted. There is an unexplained change in habitual behavior. Someone is spending more time on the computer, and when they are spending the time on the computer, when the other spouse walks by, they close the screen quickly. Concealing details of transactions from the other spouse. Unusual and repeated cash withdrawals from bank accounts, which you can see by just opening your bank account online. The greater the number of red flags, the more likely that there is something peculiar about your finances. The longer a spouse has access to perpetrating a fraud, the easier it is to get away with it. Meaning the more time that passes, the more difficult it can be to access certain records or trace funds. Which leads to a very interesting topic of spouses who financially plan for their divorce over the long game instead of the quick pull. But planning for a divorce will be another video. Finally, as promised, I want to share with you a financial fraud that might entitle you to more money from the estate than your spouse, and that is dissipation. A type of financial fraud specific to divorce is dissipation. Dissipation occurs when one spouse essentially wastes property or money without the knowledge or consent of the other spouse. There are many legal definitions of what constitutes dissipation, but they all involve minimizing marital assets by hiding them, depleting, or diverting them. Some examples include money spent on extramarital relationships, such as hotels, trips, gifts, etc. Gambling losses, transferring or supposedly loaning cash or property to others, selling expensive assets for much less than they're worth, spending down business cash accounts, excessive spending including hobbies, destroying or failing to maintain marital property. If there has been an intentional dissipation of marital assets, the innocent spouse may be entitled to a larger share of the remaining marital property. If you feel this has occurred, you need to reach out to your lawyer immediately to discuss the matter. And if you need some non-legal advice, you can always connect with me at uncoverfraud.com. Aside from dissipation, other types of fraud can be discovered during divorce by investigating the family finances. There are cases of forgeries and questionable documents, tax fraud, loan fraud, and insurance fraud. But the majority of divorce fraud is centered around misappropriation of assets. Before launching an investigation, you need to ask yourself whether there has been transparency and truthfulness about finances during your marriage and during your divorce process. Did both of you take an active role in managing the money and taxes together, or did you allow your spouse to handle the finances during your marriage and you were in the dark? One of the easiest ways to prevent fraud in a marriage is to treat finances like businesses do. Use a check and balances system where both spouses see, understand, and review the finances. Holding family members accountable for missing assets eliminates the perceived opportunity and takes away the ability to commit fraud. Although this advice may come too late for you, deterrence and vigilance is the best way to stop financial fraud from starting in the first place. My name is David Melamed, and I am a forensic accountant and fraud investigation expert. If you liked this video and you found it helpful, please don't forget to like it below. To learn more about me and the services we offer, please visit uncoverfraud.com. May tomorrow be better than today. God bless.